But let's get going on. Basically, our goal today is to discuss AI trade. And of course, there have been a few questions, as you know, in our WhatsApp group. We keep discussing about where is the market going. So we'll keep it open-ended, but let's get with the agenda. So one of the most important thing I think we need to notice is last couple of years, the market has, if you take out the bull run, we did discuss last week also that it is primarily due to AI trade. If you take out the AI related growth, like for example, NVIDIA, Meta, or means I'm counting Meta in AI because of the recent benefits they have got from it and their focus on it. But let's
Right.
say Microsoft or Google or others, they've all benefited from AI. So there is this belief in the market that AI, without AI trade, we probably would have been in some kind of a earnings recession, if not economic recession, and we may have seen, and that is also visible from almost 493 out of 500 stocks in S&P 500 have not delivered in last a couple of years or so. So coming back to that, last week we discussed about how the couple of earnings came out. Microsoft did show some slowdown. We did see some others like Meta was looking good. This week we also saw earnings from like Amazon, which looked little concerning for the market. They have some concerns around their growth. But I think coming back to the AI trade, which is like, primarily the set which impacts the semiconductor and so on, I would say the interesting part was CapEx. So we are seeing that definitely there is a huge push. There is no change in the CapEx side of the story. And when we look at the current CapEx expectations, and I think I was looking at the historic data around this, and what I realized is that the growth rates are, in fact, this year, 2025, will be even higher than what we have seen in the previous years. So that is one thing which was definitely a big learning for the market. And as we have seen, some of these stocks, specifically NVIDIA, Micron, and many other semiconductor stocks, and even Avago and so on, they have all bounced back from the original route when DeepSeek came out and people started questioning that. So would love to discuss what people are thinking, and feel free to add your question, I would say, in the chat, or we can start taking that as a discussion. But most importantly, I would say there is no, looking at the capex today, it doesn't look like there is any change in the story on all these hyperscalers, all the I would say big tech player. They are still betting on spending. We do see that market is now picking winners. It's not like anybody who is in AI space is going up. We are seeing that market has given up on AMD, which is probably in, I think, last 2 year low or something in terms of stock price. We are seeing that market has also given less multiple to NVIDIA. There are questions around what will be the impact of custom chips, which Google is doing, Meta is doing, and so on, in the longer run. So that is where I think we are now coming to the AI trade, where it's not all stocks go up. It's more about where market is believing that growth is. And in the after the earnings, after the capex release, I think the most of the immediate reaction seems to be people are not happy with AMD. People are not happy with. People are concerned about Nvidia, I would say. There is definitely, somehow we are seeing stocks like ARM and Avago. They are now getting into the space where they are leading the discussion. So any comments? I would wait for people, like what you are seeing and what your feelings are about after these earnings. So I see, Dhaval, you want to make a comment? Please go ahead.
Sure, sure. Of course, I'm sure you have introspected and analyzed this in detail. So, would be great to know your thoughts. What's going? I mean, what's deeper in there, other than the diversion, like the what do you call it, diffusion between now AI stocks. But the one thought I had, which I'd expressed on the group also, which is on one hand the capex is increasing, right, and on the other hand the growth rates are relatively going down. Like we discussed Azure last week, and then you said let's observe what others do, very rightly so. So now we are seeing that even more than Azure, there are others also whose growth rates seem to be negatively perceived by the market, right, bearishly. But at the other hand, there is someone who's doing well also, so that's the dispersion, I guess. So how is, so on one hand growth rates is going down, on the other hand capex is increasing. So there seems to be a little contradiction there, or not?
Sure. So let me say it this way
Or
that
sorry,
the
just to complete my answer, I give my answer also on the group. I also said maybe they are sandbagging it. So go ahead.
okay. So I think my view on this is very simple that growth rates in terms of as the base increases for these services, definitely it's a challenge. And that is where the trend was before AI. Now the question is whether AI in terms of usage is ready to scale up to that level where market expectations are. If you look at actual growth rates, they are not bad. The earnings were not bad at all. If you look at it, if you forget about how the market is reacting and what market is perceiving, because it's also a factor of what was the expectation versus what they delivered. So growth rates, in my view, are not like looking like they are bad. So remember, we are coming off the back of a pretty significant tightening cycle. So without AI, already the expectation was the markets to go through a kind of earning depression. And also, right now, we are
Mhm.
seeing a little more concern, like if you see consumer sentiment and so on. In general, it impacts a little bit of like the inflation expectation and the interest rate changes, which have market have now stopped expecting interest rate cuts as fast. We have discussed this last time also. So usually that impacts a little bit of corporate spending. And one area I would say there is a some slight stress which is visible is the number of bankruptcies or those kind of things in the media in the corporate world is also increasing. So there is a backdrop of tight cycle where we are coming back from. So from that perspective, these hyperscalers are still getting reasonable amount of growth. And market is definitely expecting more. And remember, we are sitting on a like a very high S&P 500. So expectations are built up, which are which they are not able to catch up with. So that is my take on the actual growth, which people are like the comments are coming as they are slowing down. Second part is that capex was never proportional to the actual revenue growth. So all of
Mhm.
these hyperscalers are talking about next 10 years investment. None of them are claiming that this capex just is justified based on today's revenue or today's growth. So
Right.
AI is seen as a decade-long story. AI is not seen as a story which is going to play out in a year or two. And that is where what we are seeing is an existential threat to these companies. Like when we look at Google, we are looking at Google as a probably their search is a threat. We discussed this last time also. When we look at somebody like Meta going after the AI chatbots and integrating into all their apps, which are serving 3 billion plus users. We did talk
Right.
about this a little bit last time. Now, this is less about justifying today's revenue. It's about existential threat of Google. Why Google is still continuing with the capex, even though their growth rates are not great. Their search is at risk. Their core business is at risk. But because they have to do it, otherwise they will lose out.
Right.
And Meta is seeing it as a. I think there was a good comment last time also. It's a exit. They think that this is their opportunity to grab the next big market. If you see Amazon and Microsoft, they are purely serving like AWS and Azure. They are purely serving, and same is true for Google Cloud. For them, it's about building up the biggest moat and in terms of compute, which they can benefit from. So I would say we should not compare the revenues today versus capex, and that's what these
Mhm.
people are betting on. Whether it will play out, we don't know yet. We will know in year or two from now whether they are able to justify continuing this kind of
Right.
capex or whether they stop. And that is where I think if you look at the market reaction today, market is again saying, and by the way, let us not forget, we had very similar situation last year for a quarter or two in 2024 when people started questioning, oh, why are we doing that much capex, which was at one-fourth the levels of where we are today.
Mhm.
And there was same question which was asked at that time, oh, there is no revenue. There is no real AI-based revenue. This spending is unsustainable. We are at 4x of that level today
Mhm.
with a continuous growth of another 40 to 50% annualized. And nobody has yet applied the brakes on capex on AI. So revenue was never the reason for it.
Mhm.
It's a belief in the market and it is the promise of AI, which is what we are going through. And question is whether this will continue. I don't think market has an answer today. But if you listen to some of the experts who are reviewing what O3 recently, OpenAI O3 came out with, if you look at some of the comments, people are saying, oh, we are 95% close to AGI. Some people are claiming we are 80% close. So everybody has their own subjective opinion. What I'm trying to say is that the progress being seen today, either in LLM or in robotics or in self-driving cars, we discussed it last time also. All
Right.
of these are transformational technologies, and there is a belief. And I would say that there must be a reason why these big players are still spending and increasing their capacities, and they are increasing their capex. So we have to just trust them for now that they know better than us because they are developing these technologies.
Yeah, yeah. I just want to, while we are on this thread, I just want to add to your correct thought process there. The other reason the revenue growth may be uh, a little bearish in perception may be the foreign exchange rate also, because US dollar is doing so well. So of course those numbers will translate into revenues. It will not translate into capex, right? I mean, directly. So that may be another additive thing by the and compared to 1 year before, Raman, I would say there's a subtlety there, because 1 year before, 1 year later, that is now, definitely Microsoft is trying to make revenues now, right, from OpenAI. So that's a shipping product, if I understand correct. I'm not using it, Copilot or anything, but I'm just saying. So if that's the case, then the growth rate, relative growth rates in quarter to quarter now should matter, right? I mean, agreed that that's a 10-year game and it's like winner takes all and that type of thing. Two, three people oligopoly will happen. So they have to put in the money. There's no choice. But I'm just saying that the comparison points now at least have some numbers you can compare versus 1 year ago. That's all I'm saying. So the
So,
discussion will become more and more
So
meaningful as we go along. Yeah.
that's right. So I would say again, my point is that the level of capex will never be justified by revenue for at least 5 years, even if the growth rates of revenue are 100%. That's the reality of where we are today.
Hmm.
So let us not even discuss revenues because that is not what
Yeah, yeah.
means.
I
We're
was just
talking
pointing
about
out the subtlety. That's all. Not for knowledge sake. Yeah, that's all.
so we're talking about $238 billion, which was spent,
Hmm.
which is already spent in 1 year, last 12 months, or financial year 2024 by
Right,
these companies. And I'm
right,
talking about only 5 or 6 top players. This year, the
right.
expectation is of the order of 400 billion plus.
In
So
fact,
you're
I heard
talking
one
about
trillion. In fact, I heard 1 trillion. One next 1 year, 1 trillion across the board means all the
that's
companies. Yeah.
yeah. So what I'm trying to say is, just to complete my thought here, is that the level of spending we are talking about, you cannot justify with any revenue growth, even 100% growth today of AI or whatever we are seeing in AI related products. So it
Right.
is an investment. So let us move on. Maybe this we have already talked enough about these topics. So
Sure,
I would
sure.
let others, maybe anybody else
I'm
has
good.
any questions on, or maybe a different perspective. Let's take that up.
so Raman, I've sent a um, note to you and Dhaval just as when he was explaining this. So one of the things I looked at was that Amazon has reduced their servers' useful life by 1 year, and that has changed their depreciation expenses. It increased their depreciation expenses because now they're depreciating at faster rate and they're upgrading their servers faster. I guess a server which is 5 year old probably cannot carry the AI workloads the same way that a later one carry. And I think they're taking a charge, and a lot of 1 billion that they said they will spend is coming because of this accelerated depreciation. Whereas the same report also says in Meta they have increased the useful life by 1 year, which is kind of going in the opposite direction. So, do you have any thoughts on that?
So, so let
Yeah.
me first of all, it's a great observation. So let me also tell you my analysis on that. One thing which we need to understand is that the servers previously, which were the servers we were running for workloads, they were running were very different configuration. There used to be a lot of CPUs and so on, and now we're talking about GPUs. So there is by default the older generation data center compute was very different from what we have today. The second part is these chips, when we talk about Hopper, Blackwell, and so on, which is the NVIDIA chips, or the most of the spending which is going into the GPUs, they are still early in their kind of development cycle. They are not as mature in terms of their life. And secondly, some of these companies are already trying to get maximum in the race for developing these models and so on. They are probably running them at a higher than recommended speeds or whatever to get the most out of it. So if you see, even when you look at the analysis of DeepSeek and so on, they have shown that they have also run NVIDIA at 800 times or something. There was some analysis around it. So everybody is trying to get maximum juice out of it. And if you are aware, like a lot of people who have been in semiconductor industry, you know that there are operating points under which a life of a chip lasts for either 1 year, 2 year, or 10 years. So what I'm hearing, again, I may be wrong, what I'm hearing is that currently the set of like data center silicon or the hardware has a life cycle of a 3 year replacement cycle. So they will be able to, everybody has to replace. So that's one reason why they have started depreciating faster. Because they are realizing that going forward and the current set of the capex which is going in, they will have to depreciate within 3 to 4 years. Now, when Meta is trying to brag about that they have increased this life of that is, of course, when you're spending hundreds and hundreds of billions of dollars, each of these servers are very, very expensive. So they have to get maximum out of it. So again, I don't want to comment on specifics, but we can all review. But let's take a step back and try to answer what is the impact on the market. The market is only talking about new spending growth right now. And we are almost at the third year of this whole AI boom. If we assume OpenAI launch or the ChatGPT launch was the AI race moment,
Right.
I'm sure many of these people were already investing heavily in this, but not as heavily because they did not know the pickup of the AI. Now we know that LLMs are so critical and they are changing, and assuming the decisions were made after that. So you also have to worry about another 1 or 2 years. You will have to almost throw away all your existing hardware if the life is 3 years, and you have to start replacing that also. So it also gives us confidence that even if it is not growing, probably the capex has to be there at a very high level for a reasonable time to come. So Naresh, I don't know if I captured that part, but again, I will look into the details you sent and we can discuss in terms of specific analysis. To be frank, I have not looked into Meta or Amazon specific comments yet, but I'm talking from a perspective of what I have seen as a general data around that the life of these servers are of the order of 3 years at a maximum capacity, and beyond that, you need to replace them.
Thank you.
So I think another thing I would like to discuss is the whole discussion around.
Raman.
So let me mute everybody right now. So let's continue because we have very limited
No,
time.
I just had a
please
very
raise.
quick question for you. That Llama, remember that you had pointed out, I forgot, but you had said there's a revenue model Facebook has with Llama, though they are giving it open source for free. What can you please remind that for a second? How are they going to make revenues with that open source AI?
So we had discussed about Meta and how they are not selling services. They are mainly looking for, because they are themselves the user of distribution. So they are
Right.
basically looking to replace the search in this.
Okay.
So they are using to retain the revenues, and probably at some point, because again, these are speculation, but basic idea is that for them, it is a opportunity to disrupt search, to
And
own
they
the AI space.
and they want to do open source because that way they can catch up the speed wise. They can catch up because they were behind. Why would they?
I would say that open source is a strategy which is not necessarily always business strategy. It is also a purely the way they develop, and that has worked for them. Again, Dhaval, I think in the
Okay,
interest of
I'm
time,
good.
like I want
I'm
to
good.
take up a
No,
couple of other
thanks.
questions.
Yeah, thanks for
Thank
reminding.
you.
I'm good. I'm good. Yeah.
So coming back to I think the critical piece which a lot of people have asked and would love to discuss is how does the GPU market change with the evolution of like their own chip? Like for example, Amazon is building their own chip. Meta has declared that they are pretty much ready to replace in 2 years from now. They will start adding their own chip. So this is where I think the game of where we see Avago is going up. We are seeing NVIDIA is getting some questions around it, or even AMD has people have lost hope because original hope was that AMD will be picking up some of that market, and now their data center revenues, which came out, and their projections for next quarter are lower. So people are actually thinking that maybe these either it is CUDA based NVIDIA or their own silicon. So I would love to have, and like if anybody has any questions on that. My take till now, what I'm seeing is that yes, that's a direction, but we're also seeing how quickly this market is changing in terms of what DeepSeek showed, that you may have to change your completely the way you are developing the models and so on. So there is still going to be a lot of need for general purpose because we never know, in another year or two, there will be a lot more innovation around how these models are trained. And when you're doing your own silicon, they are sometimes hardware. Again, I'm not an expert on that. And if somebody has any comment on it, it would be great to discuss that. But the understanding is that these are two pieces to it. One is the continuous evolution of what NVIDIA is doing in terms of ecosystem. Second is that these models may change over time, and there's much more flexibility you can get while using GPUs versus their own. But I think as a investor, we should all be watching carefully on how this evolves over time, in terms of how much of this revenue get distributed to the custom silicon. At this moment, I think I've not looked at, I think Avago's earnings were due today. I have not looked at that and any estimates which may have come out of there. If anybody has any comments on that, that would be great to capture.
No, Raman, it's next month.
All right. So it's next month. Sorry for that. So maybe somehow I felt that there was something coming out today. So if it is next month, I think we will hear that from Avago, and probably also we should be watching anything around what is going to happen on the custom silicon pickup. I think last time in the last earning in Avago, which Hoktan had said that there is going to be big pickup in 2027 onwards, if I remember correctly, that is the financial year 2027. So where we should have almost two or three of the hyperscalers who will start shipping these kind of in volumes, and I think that can be a turning point, and that is where I think another thing which people are looking at when we are looking at AI trade. Yes, that was go on.
Yeah, the only comment I had on this GPU and custom thing is that is the custom thing more for infer? So is it like GPUs, the heavy duty stuff is more for training, and the custom silicon is more for inferencing, or is the custom silicon also being developed for training?
So as I understand, these are much lower level silicon, which is there are Amazon, as I understand, are two different. There's a separate chip for inference and separate for training. And similarly, I think Meta is also doing something similar. And if you look at what Google's customs part is, that is more like an accelerator for running matrix operations and so on. So what I understand is that there will be both. And it is more at a lower level of operations, like which you can assume it is more like accelerators, which are running matrix operations, which is probably cheaper to do it in a custom silicon rather than doing on the GPUs. So that is what my understanding is. Definitely, I'm not an expert on that, and if somebody understands that part of how, for example, you can use these from a full LLM development perspective, we can take it as a separate topic. It will be very interesting to discuss that at a technical level. But coming from as an investment decision perspective, I think at this moment, we don't see anything shipping in volume. We don't see anybody slowing down on the GPU-based server capex. So that is what I think will be also something which will be interesting in NVIDIA earning later this month, when we hear from them on what is their, like, I would say that everything will become very clear if NVIDIA shows the next quarter estimates in line with what market is expecting. Because right now, forward earning of NVIDIA is I would say it's pretty cheap from that perspective. It's come down below 30. When you look at the projections from most of the analysts. Even I think many analysts recently, Morgan Stanley and Bank of America, have come out with the reconfirmation that NVIDIA earnings will be great, and there is no risk to their revenues in next couple of quarters.
Right.
So if that sustains, I would say AI trade is more or less kind of secured in short term, but looking at the market reaction, though, I would say people are just looking beyond 1 year. And probably they are trying to project, and that can change very fast based on how the growth rates look like right now.
Sure. All good. Yeah, all good. Just on that, the same thread.
One quick question.
Why from an investment? Sorry, someone is there. Then they can go. Then I can come back later.
I think let's do just to make it more organized. Let's one way to do it is to raise your hand, and we can do it one by one. And also, please feel free to use chat also. So go ahead.
Hey, Raman, this is Subhash.
Yes, Subhash.
First time here. Thank you so much for all your wisdom and knowledge. So I just want to have a financial angle to this, right? So most of Google builds TPUs, right, from a chip side of it, right? And this also goes to their own infrastructure, which is different than the Google Cloud business unit that they have, which is led by their enterprise customers. Now, my understanding was that the buying of the H800s, H100s from that they're talking about, not is more uh, how
Yeah.
much you look at the
So
multiples
I'm.
of
Is it just me or we have a
We
voice
cannot
breaking?
hear. Yeah.
Okay, so
I had
Subhash,
a
I think
breakup problem.
there is a your voice is breaking. So, but I think I got your message. So it's a very good point you made, if I understood correctly, that there are two pieces to it. That Google Cloud is not for is for hosting services for others, and they are buying and they are still spending to build the GPU capacity for serving the cloud customers who do not care about TPUs and they might be purely using NVIDIA models. If and that is a fair point, and I think that is also if that is perfectly explains the capex on the GPU. And from that perspective, I think that also brings us to the to the conclusion that these are the picks which people have already made, and that when you have an AI race going on where you are looking at how fast you can develop the next model or how fast you can capture the market, do they even have time to migrate? Like for example, Meta is still continuing developing on GPUs, even though they are claiming that they have their own internal silicon. It will be very interesting, and we have seen this in all spaces, whether it is phone, whether it is like if you remember, we had the similar discussion when Apple said they will move to their own modem. It took them 10 years after they acquired a team to even ship it. Like now they are talking about iPhone SE4 first time. They're able to ship their own modem, even though they had tried to get away from Qualcomm for such a long time. So we have to also understand that any
This is probably a little
new
easier, no? Raman,
yes.
like to start the new batch of training on a new CPU, GPU is easier than the modem, which is integrated to many things and
No, I
stuff.
understand, Pradeep. So this is a good point. My point is we have to yet to see what is the
Yeah, yeah,
impact
get to
in
see.
AI
Yes,
world.
that's a valid.
Because
Yes.
because there is a lot of people react based on these headlines. When Avago said that yes, we are coming out with like we are going to ship with these hyperscalers within 2 years, then at that time there was a big reaction, negative reaction on Nvidia. Now when Meta said that we are ready next 1 or 2 year to start replacing some of that, so we don't know how much of replacement will happen, how fast it will happen. And that is what is sometimes market react to that in a very reactionary manner that, oh, GPUs are over and now people are moving to this. And when we are talking about, and I think that there was a great point made there on the cloud versus internal use. So if the cloud buildup is still happening on GPUs, that means all these hyperscalers are still seeing a lot of upcoming demand and there is no change. Secondly, NVIDIA in their previous statements have said that even for inferencing, their current shipments, 40% of them are being used for inference, not just for training. So it looks like these things are sticky for now. And there is definitely a risk which we need to watch on the AI trade. And that probably opens up more than single trade. That's another positive thing for the market. Like it need not be just NVIDIA or GPU players. Now we are seeing Avago doing good. We are seeing other players doing good. So I think that is a fairly good point. Yes, please go ahead.
So Raman, related to that only, the dispersion, right? From investment point of view, if we know whether Broadcom is competing head to head with NVIDIA or they are doing complementary things, right? That would be useful to know, right? Of course, maybe we don't know the answer right now because that's their IP and all that. But from investment point of view, it's good to know which are the players that are really competing versus which are complementary.
That's
So
right. I think all these things we keep discussing, even from a, and I'm sure there are a lot of ways to play the market. So I think right now, this is where the benefit is seeing. If you see, even the benefit of AI trade has already gone to Avago. It's not that it's not. It's like if you see Broadcom's share has already gone up pretty significantly in last 2 years. So market is already seeing it, and there is no. I would say it's not necessarily a single player game anymore. And this is what the AI trade is maturing overall. So let me summarize saying that AI trade over in general is maturing, where we are looking at there was a single big winner, which was Nvidia. AMD tried to capture a lot of market, which is in question right now. I still believe that their game is not over yet in terms of because if you look at what is happening with China or other places where they are really aggressively ramping up on something like AMD. AMD itself has done porting of CUDA and so on. But yes, this one quarter is bad, so market is like, next quarter estimate were bad, so that's why market is reacting negatively. And then we have Avago and other players coming in. And then we did talk a little bit about, previously about Micron and other memory and so on. So those kind of things there's a lot of players in AI market. When the next thing which we also discussed last time was all the application layer player, which is yet to even show up of who are the winners. So we will see this evolve over time.
Thank you.
So Subhash, go ahead. So you had the
Yeah, just one thing. I'm sorry. Maybe I missed my question because of the network issue. Like you said, Raman, right? I wanted to understand because you have better view on how the market operate. If you look at a hardware player like NVIDIA, AMD, ARM, and the likes of it, or Qualcomm, Broadcom, whatnot, and then you have these application players, right? If you look at the views of both industries and the overall AI, market as such, where do you see the potential growth in a simple financial view of it? Where some companies have a better PE ratio to be looked at vis-a-vis Nvidia or the likes of say Meta, who are like abnormally higher in some form. So is there any insight to that where we can
Sure.
sort of look at it?
So I think we have discussed it a few times also in our WhatsApp group. We had talked about this where we said that usually current PE, which you see in most of the portals, financial portals, have not much meaning. People usually look at forward PE. That's how stocks are usually valued. And if you will see most of these companies, and when you say forward P, that is because we are looking at what is the next 4 quarters going to be, and those next 4 quarters are sometimes stock market is looking even beyond that. Sometimes market is looking like next 8 quarters, not just 4 quarters. So even the forward P number today you will see on the portals will show only the next 4 quarters. So let me answer it this way: it's a matter of what is the existing earning and the immediate visibility versus the projection of the market. And that's how the valuation become high on the current metrics. So that is what is happening in the space when you see that why the PEs are higher. So in other words, let me put it this way, that market is pricing them for a higher growth when you see the PE is higher. And market is pricing in a lower growth or a slower growth when the PE is lower. That's how the valuations work. Now, why market is pricing something higher than other is purely based on their own individual analysis and the consensus around those companies. So it would be great if if you have a follow-up question, let me know. But I think that is where my take is on how you will see PE will never be a great metric. Even the forward PE, which we like to look at, is not a great metric because, as we always say, when actual earnings come out, people talk about how much they beat the estimates or how much they came below the estimates. So even those forward Ps are assuming a certain estimate. And all the portals, they look at your estimates across analysts and they take an average. So now a certain analyst may have much higher opinion of the growth, while another analyst might have a lower. So most of these things, when we look at in the context of market data, you are looking at average numbers. You're not looking at the most optimistic or most pessimistic analyst. And there is a lot of variance when actual earnings evolve over next 12 to 24 months.
Got it. Yeah. I think the question also to add to that, Raman, was like, say, if you look at pure play platform service providers, like meaning Snowflakes or the ServiceNow or the CRMs of the world, they have a different set of matrices from a valuation perspective vis-a-vis. If you look at Microsoft, they're like almost vertically integrated. They're building their own chips as well. They're also leveraging OpenAI partnership in all possible ways, and they also have enterprise applications like Salesforce of the world. So, do you think Microsoft is a big bet for the next 10 years, or do you see there's a challenge to it? I'm just trying to compare the hardware players versus the fully integrated players.
No, that's a good question. And I would say we did touch upon it a little bit last week, and let me repeat that. So there is something called a distribution. One thing is you have a technology, second is you have the distribution. So Microsoft is much more promising because they have the biggest enterprise base, and they have easy, they can bring in any feature and they can launch it across the board, and they can provide add-on feature. So that's how the distribution works. So they are already in the place, they already have relationship with the enterprise. So for somebody like Snowflake or other place, and same thing is by the way for CRM, just to conclude, somebody like Salesforce, they are hugely deployed. So the incumbents have or especially the horizontal incumbents who are providing multiple services like Microsoft, Google, and so on, they are going to be always ahead of somebody like Snowflake, who they can be replaced very easily. Like you cannot replace Microsoft from your system easily, or from your enterprise easily, but you can easily replace somebody like Snowflake. So that is where the valuation and the kind of guaranteed growth come in. So Microsoft is much more secure and in their revenue growth, using if they are able to deliver. Of course, everybody has to deliver. There is no long-term security of a business if you do not innovate and do not continue with the times. And that is where the disruption happens. That's where the new players have the opportunity. But having said that, it's very difficult for new players to find distribution. And this is where I think we also previously discussed why Meta is a huge opportunity in AI, even though they don't look like any single game, because they are being used by, they have 3 billion install base across their apps, 3 billion users. So in a direct to consumer, they have the biggest opportunity to win from AI. And similarly, Microsoft has the biggest opportunity, and probably Google if we take their enterprise base, but Microsoft is the leader in that. So I hope I answered the question, but that is how we see the valuations being different, being the risk of the growth being higher or lower. So you will see that Microsoft is seen as a much more secure player to benefit from it.
Brahman, would you say from an investment point of view, assuming these big players are making correct decisions, business decisions, revenue decisions by investing so much capex, if you assume that they won't implode, right? Everything doesn't go down, right? Hype cycle, whatever. Then the stock price growth will be, quite optimistic, right? Because capex is one way to evaluate that they're going to get an ROI on that. And that's a good leading indicator, would you say? Right?
I won't say capex can be an indicator, because that is, they have to do it to win, but whether they will deliver is more about their penetration rates or versus, and that will always, I don't think in software world right now, we have the metrics yet, because the revenues itself is pretty limited. But I would say something like OpenAI acquisition was a big thing. Like even though they had the distribution, they had to go big on OpenAI because they knew that they cannot go as fast in integrating those features into their own apps by investing themselves. So again,
Okay.
it's getting a little too complicated here in terms of just projecting those. I don't claim that I have an expertise. I'm just trying to say how to analyze. Let's keep, from a finance perspective, let's keep it there. Why the big players have the edge? Because they have the distribution, they have the install base, they have the enterprise clients or the direct consumers direct on their platforms. So for them to deliver, this is why Apple is also going up, and even though they have not done much and they have not even impressed with their AI, Apple is gaining ground because people know there is an install base and they can easily catch up even if they are behind. So all these big players have built such a huge moat with their existing platform, which is irreplaceable. That is where I think the opportunity is for them to go and build. So Naresh, I think you have a question. Go ahead.
Yes, sir. Yeah, I wanted your thoughts on SMCI. I think they're expecting earnings next week. So even though we don't get NVIDIA earnings for a while, they carry, last time I think they said about 8% of NVIDIA's total revenue. So where do you think that company is going?
So I think SMCI, the challenge has been, it was more about their issues with their audit, and their, people lost trust in their numbers. That was the bigger concern. Otherwise, I think there is a lot of positive news around SMCI, where I think somebody like XAI or all these people have endorsed SMCI as they have used them, and there's a lot of good news around it. It definitely looks promising, and not just SMCI, I would say all of the people who are providing these kind of services. But the biggest issue which they were facing is this whole scandal around their earnings. Second part is their remember that they don't have any moat in general. So if you see their revenues and their margins are coming down, even last 2-3 quarters, even if we believe those numbers which they reported, their margins were coming down because it's a race to zero when you don't have any differentiation. And that is what is happening with all the players. So, and to be frank, we don't have any special knowledge other than that, yes, the market size is increasing. And all these stocks are, to be frank, very cheap. From a top line perspective, the question is, and thing we should observe in the upcoming earnings should be across the board, whether it is VRT, whether it is SMCI, whether it is ENS. There are 3 or 4 players in this space. who are trying to play this data center services game, like building the cooling solutions and all the other smaller non-differentiated pieces. The question to ask in these things are, now the early days it was a race to, like, whoever had the customer, they tried to capture the market. Now that everybody knows this market exists, now they are 2 years into this game building these data centers. Anybody who is able to provide those differentiated services should show that, along with the top line growth, they should show margin growth. If they're not showing margin growth, I think that's where market is rejecting them. And I think SCMCI got rejected first because of that, and second because of their audit issues. So that's where my take is that may have hit them. And even today, let's say they come out again in the next earning, I don't know if market has enough trust in them to whether they will be, those numbers are real. So that I think
Yeah.
that's once you burn the bridges from the market. So,
Yeah.
but I think it's all these plays are, as long as you are able to make a strategy and you have your own analysis, all these are part of the AI trade. So let's put it that way. All of these the companies benefit from the demand. And just to summarize, I think we're running out of time, so we'll take a quick one or two questions. But just to summarize, I think what we saw from this earning cycle is that AI trade is probably not over. It is a huge amount of kind of capex which is still coming. So hyperscalers or all these big tech players, they are not slowing down. The development in AI is we are seeing in front of our eyes every day. It's a new news. Every day there is a new app launching and improved performance and new models coming out. So we are right in the thick of this innovation cycle. And we have to also understand that the end use cases take multi-years to evolve, and the end user revenue will probably take multi-years to evolve. But at this moment, just to say again and emphasize again that everybody is betting on it, and looking at the numbers, we are talking about at least 50 to 60% growth in capex this year after a 238 billion spending last year, which is huge. So Adi, I think you have a question. Let's take this before we end.
Mine is how should we think about probability and timing for the US government to create the BTC strategic reserve and or the stockpile, and does the bucket that it's created matter?
Oh, okay. So I think, yeah, let's switch gears, and because let's spend 5 minutes, because this was a lot of questions around Bitcoin and the trade and the crypto side. So thanks for asking this. So timing and I would say is almost impossible to understand. And to be frank, if we really believe in this strategy of buying Bitcoin, you cannot do it like MicroStrategy. Like if US government does it, there will be a stampede. Like if you announce today that we are going to buy so much, so and so Bitcoin every month or every year or whatever, that will defeat the purpose. Means why don't you buy just today itself then? Because then you are almost validating it. You're almost creating a stampede across the world on buying this asset. So my take on this is very simple, that if they are smart, if they really are going to do it, and if they're smart, they would do it in a manner where it will not be such kind of a thing. I mean, there have to be some smarter way of doing it. Second part is that irrespective of whether they announce today or tomorrow, if you see the way things are progressing, there are at least 12 states in US who have started this strategic reserve process. I think Utah was the first state which already approved the even it was approved as a in the House, and they are in the second level voting right now. So basically, what I'm trying to say is that things are progressing irrespective. So how one should think about Bitcoin, in my view, is that it is happening one way or other. Whether US creates strategic reserve directly, whether they try to buy it indirectly, there are a lot of ways this can play out. But I think now there is no question about it is happening. This will become one of the alternate gold style investment, whether it is states, countries buying it in the reserve assets, whether it is corporate treasuries, which is already growing very fast. If you see MicroStrategy in the news all the time, but there are at least 25 more companies who have started in last 1 year, started acquiring Bitcoin on a regular basis. We have we already discussed the US states have already put bills to buy it. and Czech Republic signed a law to make it tax-free, Bitcoin capital gains. A lot of countries are taking positive action. Even there was a statement from India, which is usually the last to react, saying that they have to relook at crypto, given the new changes coming worldwide. So I think in the next 4 years, based on the promise of this administration, there is going to be a huge shift in how crypto is treated worldwide, because US always leads. Nobody can ignore that US is becoming pro crypto, and that will automatically create this game theory. So I don't know if I answered your question. The only way you should play it as thinking of what is my allocation into crypto, and if you don't have it, if you still doubt it, I think one has to very carefully look at it, because don't worry about what you have heard about it previously. Don't worry about whether you understand it or not. And I think we have a lot of education we have done previously through our Crypto Pulse newsletter and so on. But I think overall, what I'm trying to highlight here is that it is Bitcoin. I don't care about so much about Bitcoin. Crypto. Bitcoin is the game right now, which is happening. Yes, there are a lot of questions around the broader crypto market, but because your question was specific to BTC, I would say that the Bitcoin is going to become one of the biggest asset class going forward, overtaking gold and silver or anything. So that is definitely happening. The timing is nobody can tell, and the only way to plan is to start allocating. So that assuming that this is happening now. And just to quickly add to that, so we do capture this a lot in our Crypto Pulse newsletter. We are also we have started recently a crypto hedge strategy for helping people manage their portfolios. So there's a lot of other things which we have done recently to help people get into this in a more responsible manner. So do reach out to us on that if you have more interest on specific questions around how to do it. Quick question I'm seeing is on the chat is there a change in recommendation for Bitcoin? Earlier it was 1 to 3%. I would say I don't remember saying 1 to 3% it myself, because we don't recommend allocations. I would say that is mostly being said by probably BlackRock, which has said that everybody should have 2 to 4%. I think that's what they're saying right now. But also it depends on whether it's average fund level. They are talking about from an institutional funds level. I think it's I always say that you should think of it as what would 50 years ago, a typical person would allocate into precious metals like gold and silver and so on. Think like that for Bitcoin. How much would you like to do? Because it serves as a purpose of inflation hedge. It serves as a purpose of asset which will grow in value, and it's only limited. It's 21 million Bitcoin, which is, you can imagine how much you want to own and how much percent you want to own. That's how market thinks about it. Unlike gold, which is always growing in supply, this is not growing in supply. So, and now how you allocate, I know people who have 40 to 50% of their net worth. I know people who have 0.001% allocation. I know people who have started with 1%, which became 10%. So from that perspective, it is a very difficult question to answer. And again, means I'm not supposed to anyway give a personal advice here to you on how much this allocation should be. But I would say it should be sizable if you really believe in the storyline here. And that's where we believe it. I personally believe it. As Proflex, we have been talking about Bitcoin for a very, very long time. So I would say this is something which nobody should ignore, at least.
So,
There's another question whether it is correlated to gold. I would say in short term, almost all assets classes are correlated. But in medium to long term, Bitcoin is the least correlated asset across. So there was a very good study published by BlackRock on the correlation of Bitcoin with any other asset class, and they had shown that it is the least correlated in medium to long term basis with any asset class ever. But also remember that it doesn't have huge history. We are talking about Bitcoin coming to mainstream in last 10 years, or even being tradable easily across the world in last 10 years, and it only exists for maybe 14 and you can say 16, 17 years. So basically it is a it's difficult to talk about correlations, but at this moment, very, very short term, we have seen it is correlated with everything, all asset classes since COVID, because the money supply drives most of the asset prices in very, very short term. But in longer run, the correlations disappear. So I think that's where the opportunity is. All right, so I think we have taken a little longer than what we planned for. So let's conclude here,
Raman,
and we will. Yes,
Hello?
go ahead.
I had a related question on Bitcoin. So would you say, Raman, do you think Bitcoin is a Ponzi scheme and we need to play anyways because prices are going to go up, or not?
I think my goal here is not to talk about whether prices are going up or anything. In long run, we have seen that Bitcoin is a limited quantity and it is expected to go up. Now, my whole idea was that it is an allocation game, and everybody should look at whether you have any allocation into this or not. So if you're not, then it is basically a risk you take when you see that this is going to become a huge asset class even in your even if you're today buying QQQ, you are allocated into MicroStrategy and you have some allocation into Bitcoin automatically, and more companies are going to own it. But if there's an opportunity to run ahead of it, because this is becoming a much more relevant reserve for whether it is governments, whether it is corporate treasuries, whether it is as a precious metal. It's playing multiple roles, which is unlike any other asset class previously, which has played. So that's the reason we have been talking about this. And I would say we have planned to do maybe let's do another session purely on Bitcoin, which will be very interesting. Maybe next week we can do that, because it's a much more sophisticated topic. If you are new to it, or if you are just seeing it as a speculative asset, it's not just a speculative asset. It's changing the way we think about money, and it is changing the way we are thinking about planning the resource. How do you plan for for example, what Trump administration is promising, they are trying to use it to totally change the way you think about even the reserve assets and
Money.
how to manage your debt and so on.
Right. Okay. Thanks. Yeah. And how would you contrast Ethereum to that? You contrasted gold. How do you contrast Ethereum?
I would not comment on anything outside Bitcoin, because everything else is a very, very different topic. That's where the broader crypto topic comes in. So right now, in the context where I said Bitcoin, there is zero correlation with everything else now. In last, I would say 2 to 3 years, Bitcoin should be talked from a perspective of gold and other asset classes. Everything in crypto world is totally independent of it, and it has zero correlation with Bitcoin anymore.
Does Solana have a limited number, or it has a unlimited number? So I'm wondering if you do at least contrast it with something that is
so
a limited number.
Sorry for, I think this crypto is going to be a huge
no,
topic.
We can do crypto next time. No, but just
yes.
answer if you know. Does Solana have a limited number? I'm just asking objectively. Just want to know.
Means it's not a simple yes or no answer. There are a lot of complications around. Every crypto has their own. You have to read about that. In terms of every crypto has their own inflation parameters. They have their own burning parameters. Every crypto is a very algorithmic defined chains, and every chain has different things. So I would say let's.
I don't know is a good answer, and we can discuss it next time. Yeah, sounds good.
All right, thanks everyone. So I think we will continue this. It was great. Thanks for your participation. First of all, this is becoming interesting that we have a lot more people showing up. And what we'll do is we'll try to keep it regular, and let's try to define these topics ahead of time, and we can try to focus on those. Thanks a lot.
Wonderful.
Have a good weekend.
Thank you. Bye, folks.
Have a good weekend, everybody.